Don't be like Charlie. Charlie is that do-it-yourselfer who does himself in. Do-it-yourself is good for tile and grout. It is not good for asset protection. Charlie thought he'd save a few dollars forming his LLC online. With no guidance, he did it wrong. When he sold the property, he lost thousands and thousands of dollars. He did himself in by trying to do it himself. Don't burn yourself. Use Corporate Direct to set up and maintain your LLCs and corporations. Corporate Direct is owned and operated by attorney and rich dad advisor Garrett Sutton. Garrett wrote the bestsellers Loopholes of Real Estate and Start Your Own Corporation. He is Robert Kiyosaki's attorney for asset protection. He and his team will do it right. Visit them at corporatedirect.com or call 800-600-1760. Mention Rich Dad and receive $100 off your formation fee. That's corporatedirect.com. corporatedirect.com.
Fake money, fake teachers, fake assets. In 1971, President Richard Nixon took the U.S. dollar off the gold standard, turning the U.S. dollar into fiat money, government money, fake money. In 2008, the world economy crashed when fake assets, fake mortgages, and fake financial experts led us down a path to ruin. Think about this. Why do schools choose not to teach us about money? Why are 78% of all Americans living paycheck to paycheck? Why are students staggering under $1 trillion in student loan debt? Because a fake world makes the rich richer and the poor and middle class poorer, and that's exactly how the government wants it. The only way to protect yourself is to learn how to separate the real from the fake. Go to RichDad.com to get your copy of Fake by Robert Kiyosaki and learn how to spot the manipulation of reality we live with every day. Don't get fooled again. Get your copy of Fake by Robert Kiyosaki at RichDad.com. That's RichDad.com.
This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello, host Robert Kiyosaki, the Rich Dad Radio Show, about the good news and bad news about money. But anyway, we have a great show for you today. This is the real question. Are you working for fake money? Is your paycheck just full of fake money? And are you saving fake assets? Fake money? Is your bank account full of fake dollars or yen or pesos or euros? And are you taking advice from fake teachers? You know, people who are not really rich people, but they're got something to sell you. So I'm shamelessly plugging my latest book, which is out right now. It's called Fake Money, Fake Teachers, Fake Assets. And they're all related. Money, teachers, and assets are all one really subject because they're all fake right now. And if you read Rich Dad, Poor Dad, lesson number 1 is the rich don't work for money. And most people miss that lesson. You know, it's because money is no longer money. It's fake. And today's programs are very important money because, most people go to school to work for money. They're taught to save money and buy fake assets, paper assets, stocks, bonds, mutual funds, and ETFs. So for those of you who are really concerned about your financial future, today is a very, very important show because you'll know this between fake and what's real. And in my latest book, Fake, which is already sold out on Amazon, you can't get it there, which is pretty good. And they're demanding, they want to know why we don't have enough inventory because it's selling out everywhere. And it's a big book. But I think it's a hot subject today because of, President Trump calling the news fake and all this stuff. So it's a very good book. And fake money, fake teachers, and fake assets. They're all the same thing. They're related here. We just had this announcement that came out in January of 2019 by Bloomberg, and it says, demand for gold and silver is so high that central banks, according to the World Gold Corporation, you've got to take that with a grain of salt, has bought more gold since 1971. It took all this year, but they started to buy more gold than ever before since 1971. Now, 1971 is a very important year because that's the year President Nixon took the dollar off the gold standard. And for those who may not know financial history, because they never teach you this in school or business schools, is that in 1944, just before the end of World War II, the world decided, it was called the Bretton Woods Conference, that the U.S. dollar would be as good as gold. So what happened in 1944 was the U.S. dollar became the new gold, and central banks, like the Fed, the Euro, the Japanese central bank, and all this stuff, instead of holding gold, they held U.S. dollars. And then in 1971, President Nixon, when he took the dollar off the gold standard, allowed forced the war. What it did was the United States started printing money. I mean, it's as simple as that. The U.S. Treasury gives money to the U.S. Fed, and they print these magical dollars. That's what happened in 1971. And the world economy boomed because this fake money was going into the universe all over the world. And so that's why if you read Rich Dad, Poor Dad, lesson number 1 is the rich don't work for money because money is fake. Fake, 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 fake. Now the question is, what's going to happen now? So read my book, Fake Money, Fake Teachers, and Fake Assets. Any comments, Kim?
Well, when you talk about fake, there's fake versus real. And what's fake is everybody has an opinion about gold and silver and where it's going and where it's heading. And it really is about opinion is fake, but real is fact. So today we've got an expert here, and we're going to go through some of the facts of what's happening. We're going to go through some of the facts of why it's happening and how is it going to affect you and your money.
And should you be saving gold and silver? I mean, real gold and silver, not fake gold and silver. Fake gold and silver are ETFs. ETFs, they're as fake as they come. They're as fake as a mutual fund. And when this next crash comes, I hope I'm wrong, but these mutual funds and ETFs and bonds and all that will be toast because of what happened in 1971 when President Nixon started printing fake U.S. dollars. So our guest today is Kevin Demerit. He is the founder and chairman of Lair Capital and Wilshire Finance. And for full disclosure, I'm on Kevin's program for Lair Capital. I endorse silver and gold, but also for full disclosure, I take no pay for it. I am not censored like I am most of the time when I'm on CNBC and those guys, but Kevin lets me say what I want to say. So I do speak for Lair Capital. I do recommend buying silver and gold. So I want to thank Kevin for allowing me to be on the program, because without Lair Capital, nobody would listen to me.
Welcome, Kevin.
Well, thank you, Kim. Thank you, Robert. I appreciate it. And thank you for having me on the program. It's an honor.
Yeah, let me say one more thing about gold and silver. It's what happened in our business schools after 1971, losing their fake teachers, is all the business school teachers started denouncing gold. They said gold is a barbaric relic of the past and silver and all this stuff. So all the young guys, and Kevin's a young guy, they started coming out of the business schools in 1970 singing the tune of Volcker and those guys that gold was a barbaric relic of the past. Everybody was singing the same song. And Kevin is a young guy, very successful business school graduate. And I was kind of shocked to meet him for the first time in Beverly Hills, California. I said, Kevin, how come a young guy like you is in gold and silver? So let's start with that, Kevin. What is your background and how'd you get into forming Lair Capital and Wilshire Finance?
Yeah, my father collected coins and precious metals for as far back as I could remember. So I did go to business school, have degrees in finance and economics. When I got out of college, I came to California and immediately was in the banking industry on the international banking side. So we helped companies on an international basis, get into the market. And we actually established banks, and those banks were capitalized with fake money. They were capitalized with, back then, which was quite some time ago, a lot of European currency, so lira, what have you. And we would have to hedge all of these currencies that they had capitalized in the bank so that it didn't fluctuate too much on their balance sheet. And one day I woke up and said, why am I doing this with all of this currency? Why can't I do it with something more simple and it holds its value much better with gold? And then we can just hedge everybody at the same time. So we started doing that. The companies absolutely loved it, decreased the complications on the hedging side. But it started an increase in value also.
Yeah, wait, for those men, none of what hedge means, it means insure. It mitigate, lessen your risk. And what happened after 1971, a whole new industry was spawned. It was called FX, foreign exchange. And whole new guys started there because, currency was going up and down, up and down, up and down in value because it had no stability behind of it. So what Kevin decided to do was just hedge it, say, let's just go back to the basics, which is gold. And in my book, Fake, I call gold and silver God's money because gold and silver were here when the earth was formed, and gold and silver will be here long after we're all gone. So you started hedging instead of playing foreign exchange. You just went gold. Is that correct?
Yeah, we went into gold. I'm the one that started calling, these gold companies to purchase tremendous amounts of physical gold. And at some point, one of the managers said, I'm leaving. Do you want to come over here and manage this company? And I was fairly young at the time. I was 23 years old. I said, geez, sure. Sound like a great opportunity and something I loved, I grew up with. Managed that company for a little while. And then after that, went out and started, Lear Capital. At the time, my father passed away, and I named the company after him. So Lear Capital is named after my father, and I thought it was appropriate to do that, especially because he, like you, just absolutely loved, precious metals. Not for all of his portfolio, but some portion of his portfolio. He always tried to keep 15-20% in real money.
Right, gold and silver.
That's right.
So what's happening today? I mean, if Bloomberg is saying that central banks are buying more bullion since 1971, even the central banks this is the point, ladies and gentlemen, what happened after 1944, this is very important, the Bretton Woods Agreement, the U.S. dollar became gold technically. It was backed 20% by gold. And when Nixon took it off the gold standard, that meant the U.S. could print as much as it wanted, yet central banks hung on because the dollar is such a strong currency. So in 2018, for banks to be dumping dollars and buying hard gold and silver, what does that mean to you, Kevin?
Well, I think what it means is, a lot of what you're talking about is, you had this paper money that was backed by gold, so you couldn't print any more paper money than you had gold to back it. And when we came off that standard, now you can print as much paper money as you want. And so as you print that paper money, the value of gold typically increases because you've got more of the fake money out there that can purchase different types of assets, including gold, which is real money. So I wish I were a central bank. I can print fake money as much as I want, and I can go out and purchase
gold,
real money like gold. And in the past 50 years, the central banks have not seen the activity that we saw last year about selling off dollars and printing money and then replacing that with gold. They're after the real stuff, just like you're talking about in your book.
So what does that mean when Russia is buying all this gold and dumping U.S. dollars? What does that mean?
Well, I think it means to them that they think we've printed up too much of the fake money, right?
So they don't trust it.
They don't trust it. They think it's going to come down. We've printed $12 trillion since 2008. It's hard to comprehend $12 trillion. It's a lot of money to be printed up as debt. And when you increase the money supply or increase your debt by twice, then the value of gold is going to move up. And that's where I think that their minds are and the direction they're headed.
Yeah, and there's another there's a couple of point of views I want our listeners to understand, because this is I love this subject, is that because, Kim and I have started 3 companies we're taking public through the Toronto Stock Exchange. One was gold, one was real estate, and one was silver. Well, one was gold, one was silver. And Kim and I founded this gold company in China, and we found, I think, they estimate $1 billion worth of gold. It was
a big hit.
And all of a sudden, the Chinese government said, thank you very much, and they confiscated our company. So this is the point here, ladies and gentlemen. It's not just that they're taking gold, but they're putting gold into deep storage. They're also acquiring the mines that produce the gold. And this is Russia and China. The U.S. is completely clueless right now. We're not buying gold and silver, but Russia and China are, and they're friendly to us. Russia and China love us dearly, and they're putting this gold into deep storage. I mean, it's not coming out again. Is that correct, Kevin?
No, it's not. I saw a great cartoon in one of the Sunday papers, and it was China on one side of the fence and the United States on the other side of the fence, and we were throwing gold over to the fence to them, and they were throwing paper dollars back over the fence at us.
So what does that mean for the future if Russia and China have all this gold and the U.S. doesn't have all this gold? What does that mean?
Well, they're going to control the real money supply, because at some point you've printed up so much money that your money becomes devalued. So, since 1913, the dollar, the fake money, because of this printing since 1971, has lost 96% of its purchasing power. Things are getting more expensive. At some point, it's just unattainable, and the paper money becomes worthless.
And Kevin, what would you say to somebody who believes in save until it hurts the U.S. dollar? What would you say to them?
Save until it hurts the U.S. dollar?
Well, just save until, everybody says, I'm saving money. I go, you're an idiot, but I don't say that out loud.
Yeah, you do. Yeah, you do.
Okay. I get the question. Yes, if you're saving paper money, you have to read the book, all right? I think you come up with the best explanations that are so simple for people to understand. I get complicated, and you have to kind of stop me and simplify it, and you've been unbelievable at that throughout every book I've ever read. It's real simple. If you're holding paper money and the government keeps printing it, then if there were $10 out there at one point and I print up another $10, the first $10 isn't going to be worth very much. It's going to continue to go down in value, and that's exactly what's happening in the United States, and it's not slowing down, it's speeding up. Our deficits are growing at record levels, and so the money that's out there is going to become worth less and less. So if that's what you're saving, then you're just going broke slowly.
I want to thank you for saying that. Again, This is Robert
well said.
This is Robert Kiyosaki. I'm speaking with Kevin DeMerit, founder and chairman of Lear Capital and Wilshire Finance. He's the author of The Bulls, the Bears, and my favorite word, the Bust. His website is learcapital.com. And we come back, we'll go into, why isn't the price, what is the price of gold going to be? On one side of the equation, we have my friend Jim Rickards of The Road to Ruin. He's calling for gold to go $10,000 an ounce. And we have my other friend, Harry Dent, who says gold is going to go to $400 an ounce. So we go from one range is 400, another range is 10,000 an ounce for gold. And somewhere
in
inside there is what's going to happen in the future. The trouble is we don't know until that future arrives. So when you come back, we'll be talking further again to Kevin DeMerit. What he sees the price of gold and silver going to, but more importantly, why. And another question I'm going to ask him, how is the price manipulated? You see, you think the price of gold or anything is honest. It's not. Everything is fake. All prices are manipulated and fake.
You're listening to The Rich Dad Radio Show with Robert Kiyosaki.
What is your number one expense in life? Your number one expense. It's taxes. And I've asked the question is, how come there's no financial education in school, but why isn't there education on taxes either? They tell you to save money, which is stupid. They tell you to invest in the stock market, which is stupid. But won't they teach you about taxes? So here we have Rich Dad advisor Tom Wheelwright. We're talking about his revision for his book, Tax-Free Wealth. Welcome, Tom.
Thanks, Robert.
So what's the tax-free wealth about? What's different this time? It's a revised edition.
Well, so what we did was this is the first major tax reform we've had in 30 years, 2017.
Was 86 was the last one?
86 was the last one, back when I was in Washington, D.C.
So many guys got wiped out because of that tax change.
They did. It wiped out an entire industry, savings and loans. This new tax law is just as big, but in a very different way. It affects different industries. The tax law is always a series of incentives. And the question is always which incentives and which ones apply to me. And so the key to revising tax-free wealth was, what changed so much in this new tax law that we can absolutely take advantage of? Seriously, the amazing incentives. For example, the bonus depreciation, for example, for real estate is unbelievable. You buy a $1 million apartment, get a $300,000 deduction or more the very first year.
So if you want to make more money and pay less taxes like Donald Trump and myself, get Tom's book, Tax-Free Wealth.
Don't be like Charlie. Charlie is that do-it-yourselfer who does himself in. Do-it-yourself is good for tile and grout. It is not good for asset protection. Charlie thought he'd save a few dollars forming his LLC online. With no guidance, he did it wrong. When he sold the property, he lost thousands and thousands of dollars. He He did himself in by trying to do it himself. Don't burn yourself. Use Corporate Direct to set up and maintain your LLCs and corporations. Corporate Direct is owned and operated by attorney and rich dad advisor Garrett Sutton. Garrett wrote the bestsellers Loopholes of Real Estate and Start Your Own Corporation. He is Robert Kiyosaki's attorney for asset protection. He and his team will do it right. Visit them at corporatedirect.com or call 800-600-1760. Mention Rich Dad and receive $100 off your formation fee. That's corporatedirect.com. corporatedirect.com.
It pays to listen. Now back to Robert Kiyosaki and the Rich Dad Radio Show.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Our guest today is Kevin Demerit, and he is the founder and chairman of Lear Capital and Wilshire Finance. And for full disclosure, I am a spokesperson on their TV commercials, and he doesn't compensate me, but he allows me to say what I think is my opinion on gold and silver. So I appreciate it. You can listen to the Rich Dad Radio program anytime, anywhere on iTunes or Android, and all of our programs are archived at richdadradio.com. Once again, we don't sell gold or silver. I'm not going to take any orders today. Kevin might. But anyway.
And Kevin's also the author of The Bulls, the Bears, and the Bust.
My favorite title. But anyway, we archive our programs so you can listen to this program again, because repetition, we're an education company, not a marketing company. You can listen to this program one more time and you'll pick up twice as much. But more important, have your friends, family, and business associates listen to this program, especially if you have friends, family, and school teachers who are telling you to save money. Because this program hopefully will say, well, maybe I should put some of my money into real gold and real silver, not fake gold and fake silver, which are gold and silver ETFs.
Exchange traded funds. And actually, Kevin, that's a question I have, because in what we were reading, everybody's buying. The demand for gold is going up all over the world. Countries are buying all this gold. Individuals are buying all this gold. Yet the ETFs, which is basically paper asset that invests in gold and silver companies, that demand is down.
That's right. So you have a lot of individual investors that, this happens all the time. You get nervous about the real estate market, the stock market, what have you. The prices have been weak for a little while, and they start selling out. And so a lot of those exchange-traded funds we're seeing, outflows from the unsophisticated investors just chasing now the stock market and whatever's hot out there. And then you have the smart money like the central banks and some J.P. Morgan and so on and so forth that are actually getting back into the market at today's low prices.
So let me ask you this. Harry Dent calls for gold at $400 an ounce, and Rickards is calling for $10,000 an ounce. What are your thoughts on this?
Well, my thoughts is, I look at the inflation-adjusted price, which I think is going to be the most accurate. In 2008, the inflation-adjusted price should have been around, 2,000, 2,100. It hit 1975 as a high, so it got very close to its inflation-adjusted price. The inflation-adjusted price today is more in the $2,500, $2,600 range. That's where I think gold goes. On the silver side, it's a little bit more volatile, but it's got a little bit more upside. So I would say on the silver side, we could be looking back toward mid-40s. It hit $47 an ounce in 2010. So I think you get back into the 40s in silver trades today at around $13.
That's pretty big range there. Anyway, Harry Dent's calling for 400 and Rickards is calling for 10,000. Somewhere in between, you got to make up your mind where it's going to go. And for full disclosure, Kim and I do not save dollars. We save gold and silver. And we've been saving that for years and years and years and years and years. And I don't mean ETFs. I don't trust anything that's paper. Right, Kim?
That's right. We buy real gold, coins, bars, and silver. Real silver. And here's a question, Kevin, because you're in this business every day. I know I can't understand when Robert and I talk to people and they're saving cash, they're saving money in the bank, and we say, why don't you go buy some gold coins and have a percentage held in gold? And they don't do it. I don't understand. They're like afraid to do it. There's like this fear. Is there any risk in buying gold, or do you have any psychological explanation of why they just wouldn't go out there and just purchase some gold coins?
Or silver.
Or silver.
Silver's $20 an ounce.
Yeah.
Yeah, I think the biggest reason that people don't buy is because they don't understand it. We are so tuned into, I can get on my iPhone now or go on a computer and purchase stocks back and forth. I can call up a stockbroker and they can, buy and sell my stock, if anybody's still doing it that way.
Paper, that's what they're buying.
Right. And so when you're going to get physical gold delivered to your home or put into your IRA or 401k account or something like that, I think, I just don't understand it. If I can't get my mind wrapped around it enough, then I'm just not going to do it. So like your program here, we're more of an educational company. Here's the education on this real money, and then you can decide with real information if you'd like to come in or not. And I think that's the best way to kind of go about this, is just educate so that they understand it and they can make an intelligent, informed decision.
Right. So Lear Capital, LearCapital.com, how do you sell gold and silver?
Well, we sell physical gold and silver, so we actually deliver the physical metal to your home or a depository, depending on where you'd like it to go, or in your IRA, 401k, or other retirement accounts. We're actually authorized by the government to be able to place physical gold into those types of accounts.
That's good. How many years have you been in business?
27 years.
No trouble so far?
No trouble so far.
No Madoffs in there?
Nope. It's kind of hard, if you own the piece of gold in your hand and it's in your home, it's yours.
Other than price adjustment, is there any risks to holding gold and silver?
Well, it's
somebody
always
steals it from you. That
Yeah.
you can't get back,
Yeah, somebody bonks you over the head, then you have a problem. But no, if it's in your safety deposit box or it's in the depository, it is yours. It's physically there. It's not a piece of paper that somebody else, a CEO like Madoff or somebody, can manipulate or rip you off like Enron. It is yours. It's a bare asset. So as long as you have that physically there, it's no one else's liability.
So Kevin, one more time. This is the big question. The price is manipulated. Gold and silver prices are manipulated. They should be higher, but they're actually forced down. How is that done?
Well, it's usually done through the paper market, so options and futures contracts, where you put a small amount of money down and control a lot of not physical gold, but paper gold. And so that's what the price is going to be predicated on, is what are those futures and option markets doing. But when it gets too far out of whack, like we see it now, the physical metal and that spot market usually starts to turn itself around. So we saw the same thing right before 2008. We saw a lot of paper, gold and silver being sold into the market. It drove the price all the way down in 2000. It drove it down to $250 an ounce, and then it immediately jumped back up about 70%. So that manipulation can only last for so long because it's fake paper, and the real asset starts to come back and adjust to its real price again.
So why would they want to keep the price low? That's the question.
Well, Morgan Stanley has, over 300 million ounces of silver. Well, the strategy is buy low, sell high. If I can keep driving that silver price down like it looks like they have been, they've been selling off contracts, but they have 300 million of physical silver. I would like to buy it at those lower prices, and then when the market starts its correction again here, which I think would be fairly soon, that price is going to be much higher. They make a big profit.
So it's what you're saying. It's like they manipulate. The rumor is that's what China is doing. They're keeping the price of both gold and silver low so they can accumulate, and it's put into deep storage. They're not trading it. It's not coming back into the marketplace. They're going to store it forever, and that's why the amount of gold and silver is actually, what do you call it? I don't know what records call it, but the amount of gold and real gold and silver being traded is going down because people are hiding it. Is that your opinion?
I don't know if they're hiding it. I just think that the paper market is being manipulated from a central bank standpoint. Central banks purchased 651 tons of gold last year, the highest in 50 years, and a 74% increase over the year before. You should have seen the price go up. But like I said, they can manipulate the paper price down, buy the physical gold, and then wait for people to come back in or markets to correct, and the price of the physical stuff goes up, and that's what they're all sitting on now.
And is there a scarcity of gold, or is more and more gold being produced, more and more silver being produced, or not?
No, you have a decrease in the amount of gold being mined or found, discovered. And on the silver side, it's even a worse problem. We're very short on the supply. Industrial demand has gone through the roof, starting in mid 2003, 2004 with all the electronic devices.
And when you say industrial, there you go. Industrial being all the technology devices that silver's used for.
Right, and that started in about 2004, 2005 with all the screens and phones and big screen TVs, all those kinds of things. They gobbled up a lot of silver. The big one now, solar. Those panels are much bigger than your iPhone, and they are going through a lot of silver. There is no solar without silver.
Oh, interesting.
And so I don't think renewable energy is going away anytime soon, so I think the demand on the silver side is going to continue to rise.
Yeah, that's why if you ever watch me on Fox television, I say I like silver. Is the main reason I like silver versus gold. I mean, I have a lot of gold also, but silver is an industrial metal. I mean, it is used to make the industries run well in healthcare and water and so many other areas used in. But gold is just kind of gold. Gold is money. So the other question I have is this: why? I don't know how to say this, but why do people become afraid of real gold and real silver? I mean, I put my hand. I go to I get gold and silver in my hands, and I get happy. And other people would rather have a piece of paper.
Well,
I don't get it. And
also after talking with Kevin and other experts in gold and silver, we always end up buying more after a radio show like this. So I'm sure we'll be buying more gold and silver, Kevin.
Yeah, again, I think people just don't understand it like you do. They haven't looked at it the way you've looked at it. I heard a story once from a wise man. He was in the Navy. His ship pulled into a foreign port. He bought a Krugerrand for $50.
That was
1
me.
ounce of gold. That's right. It was you.
That's right.
Today, here it is worth $1,300, and it was preserving wealth. You're preserving your wealth, and maybe that's just boring for some people until 2008 comes along, or a 2000 comes along, and it wipes out 50-60% of your wealth, or inflation strips your fake money of its purchasing power. Then wealth preservation means a lot, and maybe it's a boring subject, or they just don't understand it.
They definitely don't understand it, because I just read a story of this woman who had a $20 gold coin, and she took it to go pay for something, and they said, you can't pay your bill with this, you must change it for cash. So she takes this $20 gold coin to the bank, and they give her $20. They give her $20 for a coin that's probably worth, what, $1,000?
Oh, $1,300 more.
$1,300, yeah. And so she had like 10 of these. And now they're trying to find her because the bank gave her $100.
I want to find her too.
Yeah,
yeah,
just crazy. I mean, you're absolutely right. They do not understand it. They don't know. They think $20 gold coin is worth $20.
Well, I'll tell you something even more amazing. J.P. Morgan just put out a chart. It was in Bloomberg, and they gave the 20-year annualized returns by asset class. So from 1999 to 2018. So obviously we're in 2019. The average investor in that 20-year period made 1.9%. Here's the crazy part to me. The S&P 500 in that 20-year period, annualized returns, was 5.6%. Gold was 7.7%. It was the second most successful investment class in that 20-year period. You have a 37% better increase or better return in each one of those years if you would have purchased gold. The only other thing that beat out the gold market was real estate, REITs, which Robert knows a ton about. But it's another tangible asset. It's a real asset. I wouldn't buy the REIT, but I'd buy a piece of real estate.
Right,
but
exactly.
It's another real asset. So it's funny that the paper assets are down below the top three. The first was REITs, the second was gold, the third was oil. All real assets.
Which we
and then the
invest in.
S&P 500.
Yep. The last thing I want to ask you is this. It's kind of hard for people to understand this thing called counterparty risk. Can you explain that? Because that's a very important point of gold and silver. There's no counterparty risk to it. Can you explain that?
Yeah, it's back to if you are holding that physical gold, you have no counterparty risk because it is yours. You can do whatever you'd like with it. But if I'm holding a stock and I have a CEO who's doing crazy things at the company, embezzling money or what have you, that's a counterparty risk. I can't do anything about that CEO. He's just doing what he's doing.
Or how about if I'm saving U.S. dollars or euro or yen and the government's printing more money?
Right. Can't do anything about the government printing the money, so when the inflation rate goes up or my purchasing power goes down on those dollars, it's all because of the amount of money that they've printed. So all of those counterparty risks in each one of the investments is not there when you have your physical gold. It would be like owning a piece of real estate 100%. It is yours. If you didn't have a loan on it, you shouldn't have too many counterparty risks, because I think gold's even better. It's a little bit more liquid, and I can put a lot of it in a safety deposit box and preserve a lot of wealth that way.
Well, anyway, Kevin, thank you very, very much for supporting my message and educating people too.
Really appreciate it, Kevin. And the website is Lear Capital, Lear, learcapital.com. I'm sure you have a wealth of information and things such as, and we didn't get to it, but there's different kind of like gold coins. You can buy American Eagles, you can buy Krugerrands, you can buy all these different types of coins. And do you have on your website the differences between them?
Yes, on the website, and we
silver
send
as
out,
well.
Yes, and we have a lot of free information that we send out so people can understand it. So, Kim, Robert, I want to thank you. I got the advanced copy of the book, and absolutely fantastic. Everyone should get a copy so you understand the difference between real money and fake money. Fantastic job again on another probably best-selling book for I don't even know how many time now.
Thanks, Kevin.
Thank you, Kevin. And thanks for supporting my message too about why real money versus fake money.
You bet.
Keep up the good work.
All right, thank you, Kevin.
Thank you.
And we come back, we're going to the most popular part of our program, which is Ask Robert.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Don't be like Charlie. Charlie is that do-it-yourselfer who does himself in. Do-it-yourself is good for tile and grout. It is not good for asset protection. Charlie thought he'd save a few dollars forming his LLC online. With no guidance, he did it wrong. When he sold the property, he lost thousands and thousands of dollars. He did himself in by trying to do it himself. Don't burn yourself. Use Corporate Direct to set up and maintain your LLCs and corporations. Corporate Direct is owned and operated by attorney and rich dad advisor Garrett Sutton. Garrett wrote the bestsellers Loopholes of Real Estate and Start Your Own Corporation. He is Robert Kiyosaki's attorney for asset protection. He and his team will do it right. Visit them at corporatedirect.com or call 800-600-1760. Mention Rich Dad and receive $100 off your formation fee. That's corporatedirect.com. corporatedirect.com.
Financial freedom begins with financial education. Now back to Robert Kiyosaki and the Rich Dad Radio Show.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Again, I want to thank our guest today, Kevin Demerit, and he's a chairman and founder of Lear Capital and Wilshire Finance. He's the author of Bulls, the Bears, and the Bust, and his website is learcapital.com. Please visit it because he is very much in the Rich Dad vein. He's into education first and then selling, and most people don't give a crap about education. They just want to sell you something. So go to learcapital.com. And once again, you can listen to the Rich Dad Radio Show anytime, anywhere on iTunes or Android, and all of our programs are archived at richdadradio.com. We archive it because we're an educational company. We don't recommend you buy gold and silver. We explain why Kim and I buy gold and silver, but I don't say you should either. But you can listen to this program again. You'll learn twice as much, but most important, have your friends, family, and business associates, those savers who are losers. Man, I caught so much hell for that when I said savers are losers. Your house is not an asset, and the rich don't work for money. That was 22 years ago I said all that. And these losers out there are still working for money. They're still saving money. They still think their house is an asset, and they're still investing for the long term in the stock market, stocks, bonds, mutual funds, and ETFs. And those guys will be toast in a few years if, and I hope I'm wrong, if, as Kevin says, bulls, bears, and the bust. If there's a bust, all those guys who are in the stock market with stocks, bonds, mutual funds, and ETFs, it's as Jim Rickards says of the book, The Road to Ruin, nice, so very nice. So many people trapped in the same device. they're all sitting there in this bubble market called the stock market and a job.
Well, and I thought it was really interesting that Kevin said the best returns have been related to real estate, gold and silver, and oil, all real assets.
Yep. And of course, your stockbroker will... Never tell you that because they don't make money selling you that stuff. They can only sell you paper, REITs and Exxon, Standard Oil, and gold and silver ETFs. Be careful, and I'm going to plug my book one more time. It's called Fake Money, Fake Teachers, Fake Assets.
And a lot of people are getting fake advice.
Fake advice. And most financial advisors are fake. They don't know what they're selling you, but they got to sell you something because otherwise they don't eat. So anyway, you can submit your questions to Ask Robert at RichDadRadio.com. We appreciate the questions. So, Tony, what's the first question we have?
First question comes from Jacob. His favorite book is Rich Dad Guide to Investing. Robert, you say you never sell gold and silver. When would you ever sell these? Would you sell once these assets peak and rotate out into another asset class such as real estate?
I like that question because it shows how desperate people are for money. And in my book, Fake, you'll read in there about a thing called an infinite return, which Kim and I practice. Once you have an infinite return, you realize you'll never need money because Kim and I use debt. You got to get out of debt. You got to get out. No, we do everything that the financial planners and bankers tell us to do. We don't do. But people are so needy for money So that's why they don't buy gold and silver, because they want to spend it. And the good thing about gold and silver, you're a couple of steps away from spending it, because you walk into a store with a gold Krugerrand or Eagle, and the clerk is clueless. They go, "What is that? I don't know. Is that a $50? Is that a gold coin? I mean, what is that?" I mean, Americans, people all over the world, are so ignorant to gold and silver. You could have a $1,500 gold coin and they wouldn't take it, right?
Well, they didn't. I mean, that was the story I told. The woman walked in with a $20 gold coin, and first of all, the place she was trying to pay her bills said, "We can't take gold. Go to the bank and exchange it," and they exchanged it for $20. A gold coin, a 1-ounce gold coin, was exchanged for $20, and she had like 10 of them.
That is how financially ignorant most people are.
And the banker didn't know either. I mean,
No.
come on, the banks didn't even know this. That's crazy.
And a little bit of tidbit, this little superfluous information, is that the only way the U.S. dollar or the yen or the euro exists, it's debt and taxes. Without debt and taxes, see, the only reason it's called government money is you have to pay taxes with it. Debt and taxes. If you understand what we talked about, counterparty risk and all that, the reason the government doesn't like gold and they don't accept it because they won't accept it for taxes. That's why they want to spend it. So Kim and I we do infinite return. It's in fake. How we use no money to make millions of dollars, pay no taxes, and we save gold and silver. We don't spend it. We spent it once, right? We spent some.
We spent it once back in the late 1980s, because we were buying our house. We were living in La Jolla. We were buying our house in Portland, Oregon. And they said we need a $23,000 down payment after we'd been jumping through hoops because our credit was terrible. To even get a loan based on who we were was ridiculous. And she said, "Yeah, we need $23,000 in 48 hours." And I'm like, "We don't have $23,000." But I opened our closet door, and there were bars of silver stacked up in our master bedroom closet, and I literally put them into brown grocery bags and walked them to the precious metals dealer just down the street, cashed them in, and that's how we bought our house. But that's the only time so far that we have sold.
And I think we're buying the silver for like $1.90 an ounce,
Yeah,
and today
that's
it's
very
like
cheap.
17 an ounce.
Yeah.
It just shows you how much it is. I'm not saying to brag, but that's how worthless the U.S. dollar has become, or the yen or the euro. Next question there, Tony. So we don't sell. We just buy and hold.
Next question comes from Dan in New Jersey. Favorite book, Rich Dad, Poor Dad. Robert, you mentioned holding gold, silver, and currency outside the U.S. legally. What kind of attorney should we consult to find out how to do this? Where can we buy real gold, as there are so many companies claiming to be real?
Yeah, you got to be very careful when you're buying, especially. But the same thing as hiring an attorney. We looked long and hard for this attorney,
Yeah, we
right?
did. Yes, we did.
Because
Came highly recommended.
if you move money offshore illegally, they can take the whole thing.
Yeah, you got to do it legally. You got to do it by the numbers. Really, really important. Really important.
Yeah, because when President Obama was after all those guys hiding money overseas, and there's guys who do it legally and people who do it illegally. So I'm not at liberty to give you our attorney's name, but please start doing your own market research the same way as you start researching those who sell you gold and silver. Most people I've met, because I buy a lot of gold and silver, most of the people I've met in the gold and silver business are fake. They're only standing behind that counter because they need the job. They're not gold and silver advocates. So when I met Kevin McDemerit, and also there's Jerry Williams here in Phoenix, it's American Precious Metals. These guys are hardcore gold guys. They've been in it for years and years and years. These guys are hardcore gold guys.
But they're also educators.
They're educators,
They want
yeah.
you to understand what you're buying. They don't want to just sell you something. If you don't understand it, they're probably not going to sell you anything.
So when I go in and I talk to a gold or silver salesperson, I just ask them a couple of questions. How long you been in the business? How much gold and silver do you buy? Numismatic. Numismatic means collectibles. So this is a rare coin. They try and sell you a numismatic, a rare gold or silver coin, run, because you don't know the value of the coin unless Daniel Samuelson, good guy, out of Austin, Texas. He is the head of the Numismatic Society. This guy lives, eats, breathes numismatics, rare coins. So I bought a lot of rare coins from him just because that guy is for real, same as Jerry Williams here at American Precious Metals and Kevin Demerit, 27 years in the business. That's what I'm looking for. If I meet some guy who's trying to sell me a numismatic, a rare coin, that, I write about it in Fake. There's a lot of people selling the silver coins that was paid to Judas to betray Jesus.
Okay.
I mean, how do you know that this was a coin that Judas accepted? You know what I mean? That's a pretty far shot. I don't think Jesus endorsed it. I don't think Judas endorsed it. But, all these things are questions you should ask before you do anything. I don't care if it's real estate, stocks, bonds, mutual funds, or ETFs. Most people are fake teachers. The reason they're called stockbrokers, real estate brokers, they're broker than you are. If you understand that, if they don't sell you something, they don't eat, and they'll do anything to eat and feed the kids and pay for the college. Just remember that, okay? So once again, I thank Kevin Demerit, chairman and founder of Lear Capital, and I thank you all for listening. You can submit your questions to Ask Robert at richdadradio.com.
This podcast is a part of the C-Suite Radio Network. For more top business podcasts, visit c-suiteradio.com.